All right, ladies and gentlemen, I hope you had a wonderful weekend. I got another watch list for you, and the main event of Jerome Powell in the FOMC, that is this week. But before we talk about any of that, I need to go over some seasonality. Remember, Friday was a big expiration. Every other expiration this year, we've gotten a lot of movement. It makes sense we have Powell, but now, halfway through September, this is where things start to get ugly. So here, I got a couple of pretty pictures for you. First thing, one, I want you to understand September is literally the worst month. Now, a lot of people will bring up October, and this is where it gets interesting because now halfway through September leading into October, it's right around the corner, and I'm sure you're aware of midterms and all of that, but quite simply, September is the worst month. October is the most volatile month. And you can see right here, the average change of September since 1945, it is a decline of 0.5% with a chance of upside being 44%. I feel like I'm doing the weather right now, but if you go to the deepest decline, you'll notice August and October, those are actually a little bit bigger or more volatility. So we have a lot to talk about, but let me give you one more, or actually two more, but like I said, related to the midterms, this is the performance quarter over quarter. So year number 2, that's when the midterms are, and you'll notice leading into the midterms, it is actually negative, and then after the midterms, that is where it gets bullish again. So pretty much people get worried leading into the midterms. After they find out the results, just like the election, they start to go up, but pretty much don't think the midterms are going to save you leading into Powell. So there is that. I got one more, final one. And just as an update, that CPI move last week, that was one of the biggest post-CPI moves ever. So literally there was like 3 other times, 2020, right at the peak of the pandemic, then 2011, I believe that was like a Eurozone crisis or Euro area crisis, and then 2008. So pretty much if the CPI has already caused one of the biggest reactions in history, I mean, what are you expecting for Powell? And I hope you're ready, but I got all of that. We're going to talk about the seasonality, but really how Powell is going to affect us this week. I got what to watch. There's going to be a bunch. I got some plays, an example, and that is pretty much it. So drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before opening. I don't even know what I'm pointing at. YouTube.com/the stock market. Free 99. We will see you there, and you're going to want to be there for Powell. And today is Sunday. Tomorrow's Monday. This is the random account generator. We need your help. We need you to post a random option trade, strike price, expiration date, all of that. Keep it below 100 and post that on the watch list. Tomorrow morning, we're going to pick a random one out. And honestly, this account has been holding, baby. So let's go and keep it up, Chad. But I think that's all. Okay, run it, baby. That's all I have.
Walking to the couch, it's the 2020 election. Live in the head, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold
All right, off the bat, Chad, as far as the keys, like we said, Powell this week is the most important thing, but there is going to be a barrage of other central bankers, including the Bank of Japan, that will be moving things. I think it is expected to be about 500 basis points worldwide of tightening this week, but we're going to hear from England, Bank of Japan, and then a bunch of other countries. But the point is, like we've been saying from last week, watch those currencies and watch the dollar, but above all else though, all eyes are going to be on Powell. Now, that leads into the second key, and this is what we've really got to understand, because you remember last week, following the CPI, even the odds of 100 basis points, that started to go up, but coming into this week, we're going to find out over the next 2 days, the narrative is looking like it is going to be 75 basis points, and it is strong. Like, literally, they are saying 75 would be wise. 75 would be wise. At this point, if Powell does anything above 75 in a weird way, that would be Powell letting the market know that he's not, that would be his middle finger. He would not be, it just, again, it would be very, very negative. It seems like consensus is 75. All right, we could do that the third straight one, and then it leaves a little bit of room, or I guess one more rate hike all the way until we get into 4. So we'll see what happens. I'm kind of cautious cautious just to the nature of last week. Anything can happen, so we will see. But that's what it's looking like coming into that. And just as an update, if you don't know, the meeting is going to be on Wednesday. So we'll get the announcement Wednesday, 2 p.m. Pacific time, or Eastern time, excuse me. And then 30 minutes afterwards, 2:30 p.m. Eastern, that is when you're going to hear Powell. But again, I'll give you an update right before that, baby. But like I'm saying here, and even this week, I'm going to talk about kind of how I feel towards the market, but it is going to be very simple. It is all up to Powell, and depending on what Powell says, that is what is going to drive everything. That's why I'm saying if Powell really wants to send a message, he could do 100 basis points. He could bring up a lot of things. He could change terminology, language, and be more forceful, or he could just do the 75, let it ride, and then we'll kind of see where the market is. But really, it all depends on what Powell says, especially after that last CPI. Remember, last CPI wasn't just because it went higher. It was the evidence of stagflation, inflation being entrenched, and other stuff that are just highlighting an overall mission failure for the Fed. We want to see what he says regarding that. So keep that in mind. But coming into the third key, this isn't how I feel, but we watched it last week. We've been calling it out. Just be on the lookout. These ranges have been important, and really coming into Powell again, that's going to be on Wednesday. I think the upside resistance, 3959, this is the September 15th high. That would be the upside resistance. Otherwise, if people start selling this off coming into tomorrow, or there's just anything to bring about negativity, again, you're going to have all these central bankers around the world making actions this week. But if we do break down 3810, that's going to be a level to watch on the downside. If that flushes through to 3800, then 3734, that is the next stop down coming into Powell. So depending on where we're at next to Powell or into Powell, then we'll have updates, and then we're going to see where we go from there. But coming into what I think, I was saying this all day on stream, I think it's reflected in some of the plays that I'm holding, but my personal opinion, I am leaning bearish this week, but it doesn't have to be violent. Pretty much like I'm saying, Powell could get away with 75. We've seen him finesse it a few times. Even then, I wouldn't be surprised to watch an upside move turn into a sell-off, but pretty much the question is, does Powell create an event to the scope or the scale of the CPI last week? If he does, that will be violent. I don't necessarily think that has to happen. It can happen, but overall, I'm just leaning negative. Depending on what he says, I think we'll be able to pick up on it. And like I said last week, if we are going to touch new lows, it is going to come with Powell's blessing. So post-expiration, we get Powell again Wednesday, Thursday, Friday. We'll really see what's up, and then we'll go from there. So I hope you're ready, but let us get into the plays. So right off the bat, I got 3 stocks that I'm looking at coming into tomorrow. We made a couple plays on Friday, and I did close out a couple of them. So if you remember the AMD, I covered that one. That was like $6 per share on that. We covered the AMET from last week. I covered corn, made like $300 profit on that one. I just didn't want to hold it. I figured I'd rather go for gas and all of that. And someone accurately said, they're like, but corn does lead to gas. You are right. You are right. But cut out of that one, closed out the BA and a couple of the other trades that we made from Friday. And then I'm still holding the MES. That was the SPY, the mini future. I said I'm going to be holding this one in a Powell, so we're still up on that. The Adobe bounce play, that one not working out. I'm down $600 on that. Arch, this is the one for coal-related energy. Down on this one, but I still like it, but that's actually a pretty big margin. Then Google, we're going to talk about that play. I'm holding that. IYT was a travel swing we've been holding, still up on that. Then Netflix, we're going to talk about that. Then SSMT or whatever. And then Yosh, I'm still down on those, and I'm not averaging down on Yosh. I'm just going to ride it and bag hold it until I could get a green exit, considering it has not had one green day. But as far as the plays now, let's start with play number 1. This is actually that Netflix play that I just showed you, and this was a small play from last week, and I just wanted to highlight for everybody that there are alternatives. So literally, we compared this to a daily on Friday, and I'm down $30. That's how much the daily would have cost, but like you're going to see, we get to hold this. What I did was I shorted 10 shares of Netflix at $237.88, and pretty much I'm down $3 a share on it. They had news on Friday. They were killing it on Friday. It was actually insane, and a lot of people were saying, don't short it, all of this, but I just wanted to highlight that if you control the size, even on 10 shares, it was about $700 of margin required to do this size, but we were highlighting how with it being so small, even if it ran against you or below you, it really just, it wasn't big gains or losses, and and I was just trying to highlight comparing it to an option. There are different alternatives. A lot of people even brought up credit spreads and all of that, and literally 10 shares, $700. That should be a similar collateral to a credit spread, but only difference here, and I think credit spreads, it does fall in line with everything I was saying on Friday and last week, but the only difference is you get a little bit more of upside or not a predefined gain on the play. So just wanted you to see this, but we're riding this out. This was an example, but I definitely want you to follow along and ride out with that. And just in general, Netflix on Friday, they killed it. They either have a lot of meat on the bone, or if there is anything positive this week, I would definitely be keeping my eye out for them. But they are play number one. Play number two, that is the other play that you saw me holding there, Google, and I did decide to go short on shares. I shorted 50 at 101.87. It had that rally there end of the day, so I'm down like $1 per share now. But my line of logic with this play is that if Powell creates any more downside, Google at $100, that $100 level, they have not been this low. Go look back at 2021. That's pretty much after their 2021 earnings that gave them a lot of cushion. But if they break down from here, this is like Facebook when we started watching them break down. So I would definitely keep your eyes out for Google. We have an open play. And then finally, number 3, baby. XLF and bank stocks, they have always been kind of our go-to leading into some of the Fed days, but this time around, I really do think they may get hit harder, for better or for worse, meaning I think they could benefit a lot off of it. Otherwise, I think they're a little bit pinned right there, so we're going to see how it plays out, but I would definitely be watching bank stocks. I don't have any plays. I have an old Wells Fargo. If you remember, I shorted that and did options. Options expired. I just ended up holding it, but I'm down on that one, but that's my only exposure. I may want to add to it, but depending on the interpretation after Powell, I really do think bank stocks will be in play, so watch out for that. But as far as everything else, no other plays. I did make a couple of day trades on Friday. We made like $500-600 trading the ES futures, and I'm still holding that. But like I told you, gonna be watching Netflix. They were a leader. Google, the bank stocks. Again, UNG, we'll see what it does this week. Not expecting too much out of it. We are back down on those, but I think you got to see and learn a lot over the last 2 weeks, meaning it's going to go up or down, even if it's good news, bad news. Nobody really knows with it, and we're kind of waiting, but closer we get to winter, I think that's going to be good. So, like I said, I'd rather kind of build around that, and I might even want to. So, if UNG does drop below 26, I will be using that as a price to maybe consider adding more. But other than that, going to be watching bank plays, watching some travel plays. We did a day trade on McDonald's and Boeing yesterday or on Friday, so see how they play out. But other than that, all about Powell. Watch the bonds, watch the currencies as a side effect from any of the other central banks, and then we'll see what happens. But this week is going to be historic, and I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, it's all about the seasons. Can you ride it out through the seasons? Can you make it through the seasons and going from one to the next? Are you going to hang on to everything you got with it and be ready for the harvest, baby? But it's game time, Chad. You got one more quarter. History on the way, and I told you, you're making it. Stop playing with me. Oh, but Chad, I love you. Get hydrated, get healthy. Let's have some fun this week. Keep it positive, and really where we go from here. 2 more weeks of September, then October. Oh, and Chad, you are built for it, so I hope you're as hyped as I am. I'll see you in the morning. Drink that water. Stay good. Sleep good. Stay good. Sleep, habibi. I don't know. I'm just so much enjoyment, excited. I really mean it. Hey, come on. It's not hyperbole. History right now. You can make the Okay, good night. Bye. Lie.